25. Just 25. That's exactly where the crypto fear and greed index is sitting right now. As of today, July 21st, 2026, we are deep, and I mean absolutely deep, in the extreme fear zone. And honestly, when you look around at the global landscape, it's pretty obvious why everybody's spooked. But hey, raw emotion? That's really only half the story.
Welcome to today's Explainer. We're mapping out what can only be described as a perfect storm. We're tracking an epic, incredibly dynamic showdown right now. On one side of the ring, we've got this intense macroeconomic and geopolitical fear weighing everything down. But on the other side, we're witnessing this almost unstoppable wall of institutional strength. It's a massive clash of forces, and the reality playing out is absolutely fascinating.
Okay, let's dive into this. Act 1. The threat, driven by extreme fear. We really need to start by looking at the dark macro environment that's creating so much of this massive selling pressure across the board. So here is how the geopolitical escalation in the Middle East has been playing out. Over the course of 10 nights, the U.S. military carried out strikes on Iran. This escalated rapidly, and by day 11, Iran officially declared a full-scale war with the United States. Then on day 12, things tightened even further, with blockades heading the Strait of Hormuz and the Houthi movement announcing a blockade of Red Sea shipping routes. This immense pressure, plus the inflationary squeeze of rising crude oil prices, just sent risk assets tumbling. The total crypto market value briefly dumped all the way down to $2.23 trillion, dragging Bitcoin right below that critical $63,000 mark. But despite all that extreme fear, $100 million, that is the staggering amount of short positions, basically traders betting that the market was going to keep crashing, that just got entirely wiped out in a tiny 4-hour window. No way, right? Well, it happened because actual buyers, meaning spot demand, immediately stepped up to the plate. That demand completely absorbed the geopolitical panic, completely reversed the momentum, and violently pushed Bitcoin right back up into the $65,000 to $66,000 range. Which brings us to Act 2, the shield and the institutional floor, because we're shifting gears here from a story of fear to an incredible display of resilience against retail panic. These corporate moves brilliantly illustrate how institutional whales are building an impenetrable wall of accumulation. I mean, check out what they're doing. Marathon Digital, MARA, has officially pivoted to a full HODL strategy. They've now surpassed a massive 20,000 Bitcoin in their treasury. Then you've got MicroStrategy. Sure, they sold $263 million in MSTR shares, but crucially, they kept every single piece of their Bitcoin. And perhaps the craziest stat of all, U.S. spot ETFs just saw a record $533.57 million in a single day of inflows, largely led by BlackRock's IBIT. This is the smart money, guys, and they are establishing a very, very hard price floor. All right, Act 3, the counterattack, fueled by regulatory breakthroughs. With that solid floor now established, the kinetic energy is really starting to shift back to the bulls. The huge external catalyst here is the progress on the Clarity Act, a massive roadblock to getting the first comprehensive U.S. digital asset regulatory framework has just been removed. The White House and Republican senators actually reached an agreement on ethical provisions that restrict federal officials from profiting on digital assets. So by clearing this political hurdle, market expectations are seriously bolstered for a Senate vote before the August recess. This is a critical de-risking event. It's essentially taking this huge dark cloud of uncertainty and just sweeping it right out of the industry. And the messaging coming from the very top is just fascinating. SEC Chair Paul Atkins plainly stated, "The president basically challenged us to make the United States a crypto capital world, so we're doing that." That is a completely neutral but incredibly powerful statement, signaling a massive structural shift. The SEC is pivoting away from its previous hostile posture and is now working to provide that long-term compliance certainty. And that certainty is absolutely what institutional money needs to see before they turn their risk appetite back on. But keep in mind, the U.S. isn't operating in a vacuum here. If we look at the international regulatory frontlines, global powers are making moves simultaneously. Over in Russia, the State Duma officially passed a comprehensive licensed crypto framework along with a cross-border trade bill. At the exact same time, South Korea is taking concrete steps to define issuance and circulation rules for won-denominated stablecoins. The legal frameworks all over the world are solidifying, and they're doing it fast. Moving on to Act 4, the skirmishes, with altcoins caught in the crossfire. While these macroeconomic titans are clashing, let's zoom in a bit on the volatile micro-battles happening across the ecosystem right now. The chaotic, unpredictable nature of the market is pretty stark right now. On one hand, broader sentiment for the entire Solana network actually scraped a 2026 low, thanks to that overarching market fear we just talked about.
But right in the middle of that depressed sentiment, a localized Solana-based meme token called Jimothy absolutely exploded. It surged 122% intraday, and that was literally just from the hype of a new exchange listing. And these little skirmishes, they are everywhere. Despite the macro storm, network development hasn't slowed down one bit. Cardano just successfully completed its first ever community-led hard fork, a major structural update, which gave the price a nice 3% bump. Over on the Robinhood chain, the Pons token shot up an incredible 72% purely on growing ecosystem interest. Oh, and Grayscale? They just submitted a registration statement for a WorldCoin ETF, pushing WLD up over 4% instantly. So yeah, the gears of this industry are absolutely still turning.
Finally, Act 5, the aftermath, revealing on-chain truths. We've talked about the geopolitical fears and the crazy altcoin volatility, but let's strip all that away and look at the absolute structural reality beneath the surface. When you pull up the active Bitcoin over the last 12 hours, the data is, well, it's wild. Get this. 98.3% of the coins moving on-chain were coins that had already moved in the last 30 days. Meanwhile, the volume from people who have held their Bitcoin for over a year, a tiny 0.2%. So the crucial point is that long-term holders have virtually frozen their assets. They aren't selling into this panic at all. Actually, scratch that. It's more like they've locked the vault and thrown away the key. The only people selling right now are short-term profit takers. And historically, when long-term holders lock up supply like this, it's a massive signal of a developing structural uptrend. Which leaves us with the ultimate question as we wrap up this explainer. We've got this perfect storm of extreme geopolitical fear colliding head-on with an impenetrable wall of institutional holding and new regulatory tailwinds. With those long-term holders flat out refusing to sell, is that surging spot demand strong enough to ignite a true relief rally? Or will the broader macro environment drag us back down? Keep your eyes glued to the data, because whatever happens next, it's going to be historic. Thanks for joining me on this deep dive, and keep learning.